Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 9th of July 2017 and we're providing our gold and silver weekly update for the week ending the 7th of July. Gold fell $28 last week from $1,241 to $1,213, having hit a high of $1,242 and a low of $1,208. In sterling terms, gold finished the week at £941, that's down £12. And in euros, it closed at 1,063, that's down €23 on the week. Silver fell 99 cents from $16.61 to $15.62, having hit a high of $16.65 and a low of $15.37. In sterling terms, it closed at £12.12, that's down 62 pence for the week. And in euros, it closed at 13.70 euros, that's down 0.84 euros. The gold to silver ratio rose from 74.71 to 1 to 77.66 to 1. The Dow Jones closed on Friday at 21,414, up 94 points on the day and up 65 points on the week. And the NASDAQ closed at 6,153, up 63 points on the day and up 13 points on the week. Brent crude fell $2.06 to $46.71, and US light crude fell $1.81 to $44.23. The dollar index stands at 96. That's up 0.37. Last week we predicted that we expected, quote, continued weakness throughout the summer, unless of course some form of international political incident occurs, unquote. Well, the selling pressure started early in the week as investors continued to respond to the hawkish comments from several central bankers, strongly suggesting that the days of lower interest rates were numbered. The Fed has already committed to a tight monetary policy, but it looks like they will be joined shortly by the European Central Bank, the Bank of Canada, and the Bank of England, though we suspect growth figures released later in the week may indeed hold back interest rates in the UK for a little while longer. Gold did steady a little after the release of the Fed minutes and a weaker than expected private sector jobs report, but Friday's robust US non-farm payrolls report reignited fears of higher interest rates sooner rather than later, and it took its toll on gold and silver prices. All eyes will be on the Bank of Canada's interest rate decision on Wednesday. Fed Chair Janet Yellen's testimony on monetary policy on Thursday, and the US CPI and retail sales reports on Friday. Well, last week's fall, especially in silver, was even larger than we thought, especially being so quick, though not surprising based on our original assessments. A few months ago, when silver had fallen back to $17, we stated that we could foresee $15 silver before $18 was reached again, only to be proved wrong a week or so later when $18 was reached. We could not quite understand this at the time because all of our calculations and assessments were pointing to silver nesting between $15 and $16. Well, it did rapidly peak to $18.62 and within a few days collapsed again to just over $16 and seesawed between $16 and $17. Now it has fallen back close to the level we were expecting then, with a $16 base having been well and truly fallen through. And with summer now upon us, we're not expecting any significant rise in silver over the next 2 months, but in fact further falls. Now that is not to say that perhaps there may be a slight initial rebound, but there is no logical reason for silver to be above $16 at the present time, and we see prices now seesawing between $15 to $16, with $15 possibly being breached within the next 2 to 3 weeks, and sooner if Canada raises interest rates. Silver is going to follow gold over the coming months, as there is little on the industrial side to set it apart. Now we want to comment briefly on the argument from some of our subscribers who proffer that gold will rebound because of crypto gold or gold-backed Bitcoin. Forget it for now. We meant to add this last week but omitted to do so. At $3,000, Bitcoin is in a bubble in our view. At its current $2,500, we still believe it to be overpriced. Any gold-backed Bitcoin may have a slightly positive influence, but over the next year or so it will be, in our assessment, be so little overall, one should not be purchasing gold simply because of the cryptocurrency effect. Even Jim Rickards, who is generally bullish on gold, believes cryptos are in a bubble, soon to be burst. Look out for interest rates and their potential to rise. Forget those who have said that they cannot rise because of the level of government debt. For last year and this year has so far proved them wrong, and we believe will continue to do so. We do not foresee major rises, but one does not need major rises to have a negative impact on gold and silver prices. The trend is what one must consider right now. Those who held off buying silver a couple of months ago will now be well rewarded. We are seeing amazing offers being made, and with silver likely to fall further, will provide yet again another excellent opportunity for those who wish to increase their stocks. But just be warned, please. Although we do not see silver falling below $14 and is more likely to hover around the $15 level, $13 is not an impossibility, though unlikely. Traders are already beginning to panic and quote $14 being breached and then $13. And these are the very people who move markets in the short term. Anything below $15, we will become more significant buyers ourselves. And gold below $1,200 will indeed provide another opportunity to pick up a bargain. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.